effects or help us manage, the medications in general. So we don't really see the need for something like what Weight Watchers is offering, which is this sort of behavioral support program in tandem with prescribing GLP-1 drugs.
I mean, it's a great question, Jerry. You do wonder, like, what does WW become going forward when the community aspect of this and the platform to support you in your, goal of losing weight, if that goes away, are they just a distributor of drugs, basically, right, of these weight loss drugs? Like, what do they become?
Yeah, I mean, I think that's the big question is how does this company stay relevant right now? There's analysts who think this market for obesity drugs is going to be huge, but they're not for everybody. And there's people, you take these drugs, but you have to keep taking them over and over. And maybe there's a role for Weight Watchers in the future and just supporting these people who, maybe they don't want to take it for their entire life. But yeah, I mean, that's something this company is really struggling to figure out.
To Jerry's point, Madison, do you think that it's fair to say some critics could argue that investors are kind of putting the cart before the horse here because we don't know? Carol, when I say we don't know, you always point out that these drugs have been around for other uses for quite a bit of time.
So, diabetics have been using,
right? To be fair, but we don't necessarily know when they're used purely for weight loss.
Yeah.
Not long-term effects, but sort of long-term trends. What needs to be done? Other support systems that people need.
Right. I mean, that's very true. It's a good point that Jerry brought up because there's a lot of issues with like long-term durability with these drugs right now. One, because they're very expensive. Not all insurance companies cover them, so some people can't afford them, and then they're forced to go off of the drugs. There's still really widespread supply shortages, which a lot of the doctors I've spoken to have said that continues to be an issue. It's not something that has really gotten any better, and so they're having to take patients off of the drugs, and then these are drugs that are meant to be taken forever, so what happens after that? So like there could still be a place for Weight Watchers,
right?
Maybe that's their sweet spot, but there are so many telehealth companies that are cropping up now to, one, prescribe weight loss drugs, to help with what happens after you go off of weight loss drugs, offering different types of nutrition therapy, things like that. Like this industry has just gotten more competitive, so they're just going to have more people to face off with.
Well, and Jerry, maybe that played out in terms of the 2024 revenue forecast, right? Because that was a disappointment from WW.
Yeah, their 2024 forecast for sales came in lower than what Wall Street was expecting. So I think it was probably a combination of Oprah's decision to leave the board and the lighter revenue forecast that investors were concerned about. I just think big picture, it's very hard to be in this business on Wall Street where we're seeing these companies. Just the other day, a biotech company said that they had good data on an obesity drug and their stock doubled.
I believe that's Viking Therapeutics, right?
So it's just like we're seeing these enormous swings in share prices based on, are you going to be relevant in the weight loss drug era? Are you not going to be relevant? So I think it's tough for Weight Watchers when, an announcement where Oprah puts out a press release saying she's not going to join, be on the board, and then the stock just gets, hammered.
Madison, go to Viking, though, because, and I'm glad you brought that up, because it does feel like every week or something we're looking at a different company.
Right.
What do we know about that company and kind of their potential role in all of this?
Yeah, I mean, we were looking at that company the other day. I think there's something like 37 employees. It's really small, and this is phase 2 data that we're talking about, so it still has a long way before it actually gets to patients.
For their own obesity drug.
Yes.
But Madison, does it raise the question that the moat that a company like Eli Lilly and that Novo Nordisk would have is not as deep of a moat, given that there is progress being made by these other companies?
Yeah, I mean, there's progress being made by these other companies, and those are sort of making them a possible acquisition target for drug makers that don't have, a presence in weight loss yet. Eli Lilly and Novo Nordisk, I mean, from the conversations I've had with them, like their pipelines run very deep and they are looking at every single thing. Like they have really early stage, discovery programs, and they're looking at every single thing that these other companies, or they say they are, that these other smaller biotech companies are looking at. But companies like Merck, like Bristol Myers, Pfizer, who sort of need to get into this giant market still, they could, buy one of these smaller companies.
Viking, by the way, now an $8.6 billion market company, but on Tuesday it was up like 121% on this news. One last thought, Jerry. Oprah still is going to kind of be involved, though, with the company. She's going to help them, I guess, with a conference and stuff, so she's kind of still around.
Yeah, she said that she's still going to, continue to collaborate with Weight Watchers, and address issues like the stigma of obesity. I mean, as we were talking, I was just thinking, like, how interesting it would be if Oprah, got involved with, like, Eli Lilly or Novo. I would think those two companies are probably reaching out to her people. I mean, it's, that would be a very interesting development.
And you know what they have? Lots of money these days.
That is true.
It's a good point.
That's actually a really interesting point. Great stuff. And this is certainly something that's very topical, again, for a second year in terms of these weight loss drugs. Guys, thank you so much. Really appreciate it. Jerry Smith, reporter at Bloomberg News, here in studio with us, along with Madison Muller, who's health reporter at Bloomberg News, but shares of WW really tanking, Tim, in today's session.
Hey, up next, business and culture and sports. When they collide, there's often a deal to be made, and our team has it covered. More on the debut episode of The Deal with Alex Rodriguez and Jason Kelly after this. First up, a check of latest world and national news with Amy Morris in the 991 Newsroom in D.C. Hey, Amy.
Hey, Tim, the House has passed another stopgap spending bill to avert a government shutdown. The Senate aims to pass it tonight. This latest deal extends the deadline by another week for agencies that were due to run out of funds this Saturday. The rest would face a March 23rd deadline. Republican Congressman French Hill of Arkansas says this is going to put off tougher fights on aid for Ukraine, Israel, and Taiwan, and U.S. border security.
We have to put a bill on the floor here in the House. We've got three choices. Take up the Senate bill, take up a compromise bill that Brian Fitzpatrick from Pennsylvania has written, or have leadership from Foreign Affairs, Armed Services, and Intelligence Committee and put their own bill on the floor. And that's what I expect to happen in the next 2 weeks.
House Budget Committee member French Hill. A new study shows a possible reason why some COVID patients suffer from brain fog long after they recover. Baylor infectious disease expert Dr. Peter Hotez says this new study suggests the virus damages blood vessels in your skull, indicating that this research is reshaping how we look at COVID.
We have to stop just thinking about COVID-19 as a respiratory virus and realize it's very much a cardiovascular virus.
Baylor infectious disease expert Dr. Peter Hotez says some researchers are concerned it could lead to long-term problems with memory. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. 240 right now on Wall Street. Traders fearing another disappointing inflation report did get a degree of relief this morning after the Federal Reserve's favored price gauge was on spot with estimates. S&P today up 15 right now, higher by 0.3%. The Dow swinging between gains and losses, lower now by 24, down less than 0.1%. NASDAQ Composite Index up 89, 16,037 on NASDAQ, up now by 0.6%. 10-year at 4.23% with a 2-year 4.62%. Spot gold is pushing higher by 0.6%, up 11.81 now at 2,046 the ounce. And West Texas Intermediate crude oil is down 0.5%, 78.17 for a barrel of WTI. Bitcoin up 1.5% right now, 61,418 on Bitcoin. Duolingo up the most in nearly 2 years today after its earnings and outlook did beat analyst expectations with its embrace of AI, lowering costs, and an expansion into math and music courses, attracting new learners. Right now, Duolingo up by 18.6%. Paramount Global, the parent of CBS, MTV, and other networks, trading higher as well after earnings. Paramount Global up now by 1.3%. Again, recapping, stocks higher. S&P 500 index up 14, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I really do feel like this whole show has been like my favorite cocktail party, to be quite honest, with everybody.
That's what we're
coming
going
in and
for
out.
here.
Yeah, exactly.
You just got to get the champagne.
I'm working on it. All right, so what do you get when sports, business, and culture collide? Oftentimes, that is when deals come together, and that's what a new Bloomberg Originals podcast and video series captures.
The first of 12 episodes is out tonight at 9 p.m. Wall Street time on Bloomberg Originals, and then tomorrow at 7 p.m. on Bloomberg TV. The premiere episode features 5-time Grand Slam tennis champ Maria Sharapova.
All right, joining us now to talk about it, Bloomberg Originals chief correspondent Jason Kelly, host of The Deal, along with a little known name in the sports world. We're talking about Alex Rodriguez. Jason's joining us here in studio. First of all, congratulations. It's pretty cool stuff.
Thank you. I neglected to bring the champagne for you. I know how this works. I mean, that's the only way you get anything good in this studio. I know. It's not sip or sweat anymore.
No, exactly.
There you go. Throwback.
Hey, listen, love the premise, because I do feel like both you and Alex, in terms of your understanding and appreciation of the sports world and really the deal-making world, you both come at it, have an understanding, but from different angles. So
yeah.
What a cool kind of combination.
Yeah, it's been fun. I mean, I've joked when people have asked me sort of the origin story of this show, it really was born of conversations that Alex and I were having. I had done a documentary about him for our Athlete Empire series a couple years ago. We kept in touch. We were having lunch in Miami, where he lives and works, and where A-Rod Corp is headquartered. And we were talking about, sort of things that we could do together. And we kind of came around to this idea of a podcast. And we had been talking about like new ownership, and he's an owner in the NBA, and what was happening with media and what was happening with athletes. And he said, well, what would the show be? And in a sort of like Seinfeld way, I was like, this is the show. This is the show.
Yeah.
And
it's funny.
And then we added in, really interesting people on a rotating or sort of on a rolling basis, guests who we really wanted to talk to, some of whom he knew, some of whom I knew, some of whom we didn't really know but knew of. And there you go. You have the deal.
So when you go into an episode, past sort of the lunch that you had with him when you planned this out, but when you go into an episode, what's the goal? What do you want to come back with?
Yeah, that's a great question. I mean, so one of the funny things that happened with this show was we didn't know what we were going to call it. We went through, as you tend to do, 250 names. We're debating them back and forth. The teams that worked on this on both sides were incredible. We finally settled on The Deal, and it really was like a text exchange. We're like, the deal? Okay, we're good.
Yeah.
And what we realized then was that was the architecture for it. And so the way we go in is, Alex and I will talk with our team, beforehand, and essentially say, what are the 2 or 3 deals that we want to talk to this person about? And some of them may be actual transactions. Jerry Cardinal, who comes up in a later episode, buying AC Milan. How does he do that? Or creating the Yes Network, which he also did. And now he's at Redbird. He was at Goldman at the time. He was an advisor to the Yankees. But sometimes it's a deal in sort of the most broad definition. And the example of that is Derek Jeter and Alex Rodriguez, A-Rod, moving to third base when he came to the Yankees from shortstop because the Yankees already had a shortstop. That's a deal that ultimately culminates in a World Series championship in 2009. So we have a pretty wide aperture for that, but that gives us a mechanism by which to really go deep with someone.
The deal in like all its different forms.
Yes.
All right, so talk to us about Maria Sharapova. Obviously, I can see why you were interested, but let's talk about kind of the setup here for her.
Oh, boy.
So, where do you begin?
It's funny with Maria. So I read her book in preparation for the interview, and her story is just phenomenal. You know, she and her dad, moved to the United States essentially with nothing. She's 7 years old. They sort of show up on the doorstep of these tennis academies. Her dad just thinks she has this promise. Turns out she does. And then, the deal for her that we talk about in the first part of the episode is winning Wimbledon in 2004. She's 17 years old, and that changes everything. She gets Motorola. She gets all these different things. Then what happens is, as she progresses through her career, like Alex, she starts to think about being not just an endorser, but an investor. And so she comes up with, a really specific way of doing things. And actually, we have a clip from the show where she talks about how she assesses something.
I'm a products person. I love, if someone says, invest in this, there's no reason this is going to fail, I'd be like, send me the product, here's the address, and don't contact me for 4 weeks. I want to live with it. I want to breathe it. I want to try it. I want to wear it. whatever it is, I want it. And I want to give it to my friends, and I want them to give me their feedback. I want to give it to my family who have different tastes, who have different, appreciations and aesthetics. And until they tell me that they like it and they're into it, I won't have a next call with you.
So that's Maria Sharapova.
I love her, though, aspect of I'm not just going to say yes because it's financially a great deal.
Right.
I want to understand this product. I want to share it with people in my
right.
orbit.
Don't you love that?
Yes.
Yeah.
Yes.
I love that idea of saying don't just send it to me, but I've got this group of people who I trust, who come from different backgrounds and all of that.
Okay, so give us a preview of other conversations. I don't know if you can even sometimes, when I ask people about other conversations, well, you're going to have to wait and see. Can you tell us about who else you're going to talk to?
How deep can you go?
I'll just tell you.
Can you, please?
Is anyone listening?
Yes, everyone's listening.
Everyone's
millions
listening.
and billions around the world.
Exactly. And watching live on YouTube and Bloomberg Television. So Michael Strahan next week, who was a fascinating conversation. These are two guys who played in New York at the same time, and I've been asked a lot about Strahan.
Because he also, I feel like, has had so many different kinds of deals in his world, right?
And he is everything you would want him to be. Just the warmest, most engaging, hilarious guy. And one of the things he talks about, to give you a bit of a preview on that one, is this notion of how being in New York changes everything. And he and Alex compare notes about, Alex played in Texas played in Seattle, then Texas, then came to the Yankees. All Michael ever knew was New York because he came from college to the Giants, played there his entire career. And the other thing that they talk about, which I found so interesting, was it's one thing to play in the pros, it's another thing to get a ring, to win a championship. And Michael says one of the most important things he learned was it's entirely different to be introduced as someone who played in the NFL and a Super Bowl champion. And that changes the entire trajectory of his life.
Think about it when we do a lead to somebody, right?
Yeah.
Especially if they're an athlete. We talk about how many times they've won a championship or whatever. It really puts them in a whole different league.
You said it about Maria, 5-time Grand Slam champion. It's that's how we signify success. So it's interesting to hear everybody's playbook, what the similarities are. And I will tell you, one of the big similarities among all these athletes that we've talked to, they're grinders, man.
Yeah.
They just love the work, and they're coachable, and I've seen that with Alex too. It's when we're prepping for an interview, the way you guys do.
Yeah.
It's that coachability factor is huge.
Well,
here's the problem: we're not athletes the way that they are.
Oh, you're an athlete.
No, but they love the work. We love the work.
Yeah.
You love the work, and it shows every time you do another episode of The Deal. Now a new episode, but your whole series, your whole sports world.
Tune in. Coming up, it's dropping on podcasts. It's everywhere you want it to be.
The Deal with Alex Rodriguez and Jason Kelly tonight at 9 p.m. Wall Street Time. Bloomberg Originals tomorrow at 7 p.m. on Bloomberg TV. The podcast already available for download at Bloomberg.com, wherever you get your podcasts. Jason, thanks.
Thank you.
Coming up, one more thing right here on Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Snowflake shares are plunging after earnings. The software maker delivered a disappointing sales forecast. Also announced that CEO Frank Slootman is stepping down from his role. Right now, we've got shares of Snowflake, they are down 18.8%. Salesforce out with a lackluster annual sales forecast, but investors were pleased by the company's continued profitability, a first ever dividend, and an increase in share buybacks. Salesforce.com up now by 2.5%. WW International, a stock we were talking about earlier today here on Bloomberg Business Week. Shares are plunging after Oprah Winfrey said she is preparing to leave its board. The latest blow to the obesity-focused company that is struggling to stay relevant in the Ozempic era. Winfrey, whose relationship with the company goes back nearly a decade, says she will not stand for re-election at WW's May shareholder meeting. WW, of course, the old Weight Watchers. Right now, we've got WW shares. They are plunging by 22%. Earnings news from Best Buy. It reported sales that beat expectations as the retailer made progress toward reversing a two-year slump amid soft demand for electronics and appliances. Comparable sales, a key metric for the retail sector, down 4.8% in the fourth quarter compared with the average analyst estimate of a 5.3% decrease. Best Buy up right now by 1.26%. Also out with earnings, Bath and Body Works. That stock lower after the retailer of personal care and home fragrance products gave disappointing sales and profit views for the current quarter. Shares of Bath and Body Works down 5.3%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenevec, and that is Carol Masser. We're in New York City. Let's go to Washington, D.C. now for a check of the latest world and national news. Amy Morris is in the 99.1 newsroom. Hey, Amy.
Hi, Tim. The House has passed a new stopgap deal to fund the federal government a day after congressional leaders reached a deal to avert a government shutdown at the end of the week. Maya McGinnis is president of the Committee for a Responsible Federal Budget.
We have now kicked the can so many times on the fiscal situation that there is no way that we will be able to fix the huge debt threat that we are facing without really major shifts. And as we can see, when the government's talking about even very small changes, which is what's going on in this deal, they are basically unable to make very difficult choices and stick with them.
Maya McGinnis with the Committee for a Responsible Federal Budget. The Senate says it aims to pass that bill tonight. Air Force One has touched down in Brownsville, Texas, where President Biden is visiting with Border Patrol agents and local leaders. Donald Trump is also in Texas. He is scheduled to speak in Eagle Pass. And singer Cyndi Lauper is selling her music catalog. Entertainment is buying the catalog. It's all part of a project to create new outlets for Lauper's work. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Carol and Tim.
All right, Amy Morris, thank you so much. All right, folks, to our One More Thing this hour, and we are looking at a story about what $1 million buys in the world's most expensive property markets. And I'm just going to tell you, in Monaco, doesn't buy a lot.
Yeah, you think New York is expensive, okay? Here's what you get. 172 square feet.
What is
in
that
Monaco.
even? What is that?
I think some people
like
have
12
closets
by
that big.
12-ish?
Yeah.
Yeah.
I mean, hey, it's something.
It's something.
It's something
and
if you're by
in
yourself,
Monaco,
you know.
And you're in Monaco.
Exactly.
Which is pretty gorgeous. Let's get through a couple of others. If you are in London, it gets you about 355 square feet. New York, 366, so a little bit more there in New York.
Yeah, you get a little more for your money in Los Angeles, too. 409 square feet in L.A. The list goes on. Paris, 431 square feet, and then Shanghai, 452 square feet.
Yeah, if you want to go to where you can probably get in terms of some of the major markets, Mumbai, you'll get you get about 1,100 square feet. So that's kind of real. That's a lot more space.
But it's still very expensive.
Yeah, exactly.
The reason why we're talking about $1 million is because it's the top 5% of the market. This is what we're considering, or Knight Frank is considering, prime real estate. So, as we mentioned, in New York, it amounts to about 366 square feet. Somewhere like Madrid, over 1,000 square feet.
Yeah, exactly. In Dubai, skyrocketing demand amid an expat inflow has led buyers to queue for $1 million homes. So we're seeing some buying. I'm trying to think if Dubai is on this list.
Yeah, Dubai's on there.
980 square feet is what $1 million will buy for you.
Another one that sticks out to me on this list, Carol, is Miami. We've talked a lot about the growth of Miami in recent years post-COVID. It's at the top of the list, 646 square feet for $1 million.
All right, so just in case you're out there shopping at $1 million, if you want a lot of space, go to Mumbai. If you don't care, but you want to be, among the multimillionaires and on their yachts in Monaco, you're only going to get 172 square feet. I'm just going to say you're going to need maybe some good wine to get your way through it.
That's a small space.
It's a small space. All right, folks, that's going to do it for this hour of Bloomberg Business Week. For those of you watching on TV, coming up next is The Close. For those of you staying with us on radio, YouTube, and Originals, coming up in the next 2 hours, we're going to talk about that tight range in treasuries, how it could lead to a dramatic breakout.
Also, there's a double-edged sword when it comes to fandom. Think what has happened to the NFL and the Chiefs as a result of Travis Kelce and Taylor Swift.
Pig butchering, anybody? It's among our most read stories. We're talking about scams that are netting more than $75 billion. So much to unpack. We'll do it in the next couple of hours. This is Bloomberg Business Week.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, we are just 60 minutes away from the closing bell on this leap year Thursday, February 29th.
Don't you think this should be a holiday?
Yes, indeed.
Why not?
Why not?
You know what? There's a lot of concern about the presidential election and the different issues and positions that the two likely nominees have.
Yeah.
Just come out and say it.
Yeah. It is kind
of vacation day on the leap day.
Maybe not a holiday, but kind of a gift to investors because that preferred inflation report that the Fed watches very closely coming in exactly as forecast.
You see, I'm trying to take you off track here. And you just bring us right back.
Focus.
Okay, so speaking of focusing, that tight range in treasuries could lead to a dramatic breakout. We're going to get the numbers from Bloomberg Intelligence's chief interest rate strategist, Ira Jersey, in just a few minutes.
I love how he tracks it day to day, the moves and what we need to understand about the Treasury trade and the curve. Also, we're going to get into, those NFL fans. How about them? Thanks to Taylor Swift. Well, it turns out there's a double-edged sword when it comes to fandom. So we're going to get into that, the impact on the consumer-facing space.
And pig butchering scams, netting more than $75 billion. Maybe you haven't been the victim of one. Hopefully you haven't been the victim of one, but you've definitely gotten those text messages trying to get you to follow along. We know you have a lot of questions about this. It's among the most read on the Bloomberg terminal.
And do you worry about money, Mr. Stanovic?
Who doesn't, is what I'll say. Is that
do you in the
fair?
Control room worry about money?
Everybody worries about money.
Everybody's hands are in the air.
Thumbs up, thumbs down.
Everybody. All right, well, you're definitely not alone. Some numbers, though, on the consumer, how we're doing. We're going to get that, Tim, from Wells Fargo.
Hey, first up, a check on the day's trade and top business stories. Here's Charlie Pellet.
I thank you very much indeed. Money changes everything. That's what Cindy Lauper would say. We have got the Dow lower, S&P, NASDAQ. They are both advancing from the pigs to the bulls and the bears. And right now we are looking at a mixed market with the S&P up 17 points higher by about 0.3%, 5,087. We've got the Dow down 4 now, swinging between gains and losses. Little changed on the day with NASDAQ up 96, gain there of 0.6%. 10-year 4.24% with a 2-year 4.63%. Spot gold up 0.5% right now, up $10.50 the ounce to $2,045. West Texas Intermediate crude down 0.7%, 78.02 a barrel. Bitcoin up 1.9%, $61,700 on Bitcoin. So it is a mixed Thursday here, but what about the overall market backdrop? Emily Rowland is co-chief investment strategist at JH Investments.
Valuations have not meant much, of course, to this market. We're trading at over 20 times forward earnings on the S&P 500. Incredible rallies. It's amazing to see the poor economic data coming in, especially in Europe. And meanwhile, we've got these markets at record highs. So momentum, sentiment is driving this market higher, and it's pretty hard to fight at this point.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Duolingo shares, they are surging today by 18.7%. It is jumping the most in about 2 years after its earnings and outlook beat analyst expectations with its embrace of artificial intelligence, lowering costs, and expansion also into math and music courses is attracting new learners. Again, recapping, S&P 500 index up 15 now, higher by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Wall Street traders, fearing another disappointing inflation report, got a degree of relief after the Fed's favorite price gauge was on spot with estimates. Bond yields fell as the core PCE index added to bets that the Fed will actually be able to cut rates, perhaps, Carol, perhaps, as early as June.
Yeah, interesting. So those are the moves today, but what about looking forward? Ira Jersey is Bloomberg Intelligence Chief U.S. Interest Rate Strategist, joining us right now from BI headquarters in Princeton, New Jersey. Hey, Ira, your take on the trade coming off of the inflation numbers. Let's start there, because we definitely did see yields move down. Any significance in terms of the gap between the 10 and the 2 or the trade overall for you?
Not really. It's also, remember, it's month end, so we get a lot of rebalancing around now and get people getting ready to add some duration because of all the issuance that was done over the course of this month. So people need to add some. I do think that people were relieved that it wasn't worse. But the PCE report, even though it's the Fed's preferred measure, because it comes after CPI, it's much easier to forecast because a lot of the inputs that go into PCE, we already know more or less what they're going to be. So it generally surprises a little bit less. But I think that there were some people who were worried that core might have gone up by another 1/10, and that would have probably seen the market sell off and probably the front end do worse than the long end. So that's that bear flattener that you've been seeing over the last couple of months, or last couple of weeks anyway, start to rear its head again. So, it's been amazingly unvolatile in the long end of the Treasury market. The last 3 weeks, we've been in a 14 basis point trading range. We haven't been in a situation like that since early 2021.
Oh, so since we're in such a tight trading range, Ira, what does that tell you about, and the team, about moves forward?
Yeah, so it tells me that, obviously there's not a lot of conviction among investors right now as to which direction things are going to go. Yields are more attractive than they were when 10-year treasuries were at 380, for sure, now that we're 45, 50 basis points above that. But at the same time, I think people don't want to stay very short because there's still talk about when the Fed's going to cut, not if they're going to cut, right? That's the narrative shift that I think people are waiting for before they get full bore short, because anyone who obviously sold the market at 4.5% after it went to 5%, they were high-fiving, but a lot of those people, and I talked to one or two of them a couple of months ago, they didn't get out in time, and they wound up losing, on that trade because they thought, yields are going to stay, 5.5%, and yields obviously went below 4 again in just a couple of months. So, even though near term we haven't been very volatile, we've been basically in a 150 basis point trading range over the last 9 months, and that's that's about as wide as you tend to get during the course of a cycle.
Hey, Ira, it's interesting what you said about the shift. It's it's not about if they do it, it's just when they, right, the timing. But could we be possibly, and this is something we've certainly talked about the last couple of weeks or so, could we be wrong that maybe it's not, that, but maybe if and when they actually raise rates again? Like, are we smart in kind of limiting that thinking, if you will?
Well, there are some investors who are clearly worried, and there's some tail hedging going on right now where people are buying options that they're effectively buying put options on some interest rate futures. So thinking that maybe there's some chance the Fed will either be on hold or even raise interest rates 25 basis points by the end of this year. Fundamentally, I don't think that that's the case. I think it's much more likely that the Federal Reserve would remain on hold. So if we continue to get prints like we had today, 0.3, 0.4 on core PC and core CPI, that's not good for the Fed. And that means that, so my read on that is that the Federal Reserve would say, okay, inflation's either reaccelerating or not decelerating more, which is what they want to see. So they're much more likely, I think, initially to at least be on hold for some period of time, the rest of the year into 2025, than they would be to hike interest rates again near term, because you do see there is some data that is suggesting that the economy is slowing slowly, right? So it's not just falling off a cliff, but at the same time, like the economy might be on a sustainable, slow growth path, and in a way that's perfect for the Fed to do nothing. And it's certainly getting more and more into the market narrative. Look, we were at the beginning of the year, we were pricing for more than 6 interest rate cuts. Right. Now we're pricing for barely 3. So going to 0 over the next couple of months is not impossible at all. Again, not our call. I do think that they'll cut interest rates at some point this year, but when that's going to start is certainly a major uncertainty at the moment.
Hey, one more market trade I want to throw at you, a story that just crossed, I guess about 8 minutes ago on the Bloomberg, talking about the 5-year break-even rate, the yield difference between treasuries and inflation-linked bonds increasing to about 2.45%, the biggest since October. Our headline on the story is rising treasury break-even rates show stirring inflation concerns. I don't know, one day's trade, I don't know, like how do you factor that into what we should focus on and maybe what we shouldn't?
Well, I think going into this year, one of the things that we had noted was we thought that inflation break-evens were much too low, as was the expectation for how far the Fed was going to go. So we had always thought that they were not going to cut more than 3 times this year. And inflation break-evens probably closer to 2.5 seems pretty realistic, particularly on headline inflation. The only way you get way below that and down toward 2% is probably, at least in the near term, is probably with oil prices going down quite substantially. But they seem to be underpinned, above 70. So unless they get down to, 40, 45 or 50, it's going to be hard for in the near term to get break evens and inflation down below 2% for sure.
All right, great stuff. As always, really appreciate your input here. Ira Jersey is Bloomberg Intelligence Chief U.S. Interest Rate Strategist joining us here on Bloomberg Business Week. Ira, thank you so much. This is Bloomberg.
I got my mind set on you. I got my mind set on you.
Okay, Carol, we've talked about this before. Just how much value did Taylor Swift bring to the NFL and to the Chiefs? Well, according to the brand analytics firm Apex Marketing Group, the tie-up between Travis Kelce and Swift is worth $331.5 million to the NFL and to the Chiefs. These figures courtesy of the Wall Street Journal earlier this month.
That's some real money. All right, the reason, fandom, the people like
my sister,
like your sister, right? Like my daughter. Well, maybe I don't know if she started watching, but we certainly talked about it a lot. This year, they started watching every Kansas City Chiefs game and even got a Swift jersey. Your sister?
Yeah.
Someone who actually did that, right?
It was really annoying. She's like, we were all together once, and she's like, I have to watch the game. I'm like, since when do you watch the game?
Like, did you guys see that play? Did you guys see Taylor cheering?
I care about this.
All right. Well, the concept of fandom is what got our next guest to look into how it feeds into consumer sentiment. We got with us Katie Thomas, back with us, lead at the Carney Consumer Institute, joining us on Zoom from Pittsburgh, Pennsylvania. Katie, great to have you back with us. I do feel like, man, Taylor makes us the effect that she has had on our world in so many different ways. Talk to us about fandom and what you guys looked into specifically.
Well, exactly. I mean, thanks. It's great to be back with you guys. That's exactly what motivated us, was all this, it was sort of two fandoms clashing together, right? Taylor Swift and the NFL. But we also have a podcast called Inside the Mind, where we were talking to super fans. We had fans of sports teams that were, Manchester United, that were just so committed, and they invest a lot of time and money into their fandom. And we realized as we dug into it further, though, it's particularly topical in the U.S. right now and all around the world, because we're so polarized that fandom used to be generally a good thing, or something maybe you'd have a bit of fun with. You'd have a rival or a product that you hated on in a fun way. But it's really, now that we're so polarized, it can actually be a challenge of finding that sweet spot of, really being an enthusiast of a brand, but not tipping over that edge into, if you're not with me, you're against me. And that's what really motivated us to dig into fandom and understand a little bit more how it relates to some of the big challenges we're seeing today, such as brand risk, brand loyalty, and even how to build and cultivate community.
Yeah, so talk about that a little bit, because there's certainly this double-edged sword, as you mentioned in your research, about when it comes to fandom. And I think, for example, I don't know if this is relevant to this conversation, but it makes me think of, Carol, what we saw with Wendy's earlier this week, when they said there was going to be surge pricing in their earnings call, and everybody freaked out about the price of the Baconator changing on these digital meal these digital menus at drive-thrus and at restaurants. So how did this type of sort of fandom come into the research?
Yeah, so I mean, I think you're spot on, Tim, which is that's exactly what we've seen. Hating on a brand used to be lighthearted. It used to be Miracle Whip, right? Which was a polarizing product that some people loved it, some people hated it. Then a few years ago, we saw it start to get a little bit more political with, perhaps Nike and other brands that, seemed like they were taking a stance. But we've just become further entrenched in some of this polarization, as well as access to information. So you're seeing people just so quickly get spun up into a story. And so what we really said was, first, you want to start by just understanding who your consumers are and just how much of a fan they are. Are they buying your product because it's habit, or because they're truly loyal, they're truly a fan or an enthusiast of the brand? And then if they are a super fan, how much risk does that open you up to? So when we think about, like certain football teams, for instance, I think are a great example. You see people with trade decisions or draft decisions. You see people get really opinionated to the point where they get angry and they feel personally betrayed by it. So it's really thinking about how to balance that emotional connection to the brand and still drive engagement.
Yeah, what's kind of rough is I just think about, especially coming off the pandemic and George Floyd, we talked about the importance of companies to step up and take positions on, things that are going on in society, helping to kind of, lay out what's right, what's wrong, and take a position, support their employee base as a result. But I feel like companies and also the influencers or stars that they align with, can work out great, or it also can get them into trouble. So it's not easy.
Absolutely. Yeah, absolutely, Carol. We've seen just what you're describing, which is for a long time we all fell into that sort of narrative around people are seeking transparency for brands. People want brands to stand up and say something. And you're seeing that walk back a little bit because we're realizing that's exactly what happened, which is it made just simple things you buy and made it political. And so the conversations we're having are really around, are the stances that we're taking true to the brand or true to certain people that work on the brand? And that's where it starts to get a little bit trickier of making sure it's like stances you take on specific social issues feel like they're part of the ethos of a brand. And most importantly, perhaps that you're willing to lose sales. And so we've seen, Patagonia is a good example.
I knew you were going to say
a
that.
Brand. Yeah, that's willing to take a stand. Oh, go ahead, Tim.
But it's a private company.
Yeah.
And
yes.
It's fair, I think, to say that a lot of the people who buy Patagonia would be aligned with the company's values. So I feel like that's not really a risky one, but it's kind of an outlier today. I mean, are there any other brands you can point to?
Part of their ethos, right? Like in terms.
Oh, for sure. I mean, are there any other brands you can point to?
Oh, I think that's actually the exact argument to be made here, which is when you really are a bigger mainstream brand, there should be a lot of thoughtfulness around exactly what it means to take a stand and what good looks like, and really checking in with, is there any risk here in terms of alienating the core? How do we stay on message? What's the simple brand message that we're trying to stay true to here? And if we do have any backlash, how do we stay true to that message as opposed to getting lost in the nuance of it all? But sometimes less is more, and we're realizing that even though for a while consumers were voicing, I want a brand to stand up for a specific cause, that maybe that's not actually the case, and there's more risk there than good.
Katie, is it safe to say, though, when it comes down to it, companies, they're going to be very careful, cautious in terms of who they align with? I mean, I think of Bud Light, right? The controversy over there. I mean, because they don't want to impact, especially if they're publicly held, they don't want to impact the top line. They don't want to impact sales growth. So if they are nervous, they're going to back away.
Exactly. And that's why, coming all the way back around to fandom, it's really thinking about who your lovers are. How do you take the people that are in a bit of a lower part of the funnel? So maybe they're buying your products on habit, or maybe they're a fan, but they're not necessarily outspoken and advocating for your brand. How do you move them up the funnel a little bit, become more of a lifestyle brand? So some of those brands you've seen recently are anything from, Carhartt's a good example, Lululemon. You've seen those brands start to extend a little bit and feel like they're more ingrained in people's lifestyles. So really focusing on that upside, and then mitigating the risks on the other side is how you can kind of like almost leverage that fandom to operate through this hazy environment.
Yeah, when it works really well, or it can for a company. When it goes south, not so great. Kitty Thomas, thanks so much. Have a great weekend. She's the lead at the Carney Consumer Institute. Hey, coming up next, those seemingly random texts you get from an unknown number that seem like they're meant for someone else? It's a scam called pig butchering. It's kind of rough.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a mixed market right now. 39 minutes to go ahead of the closing bell. We have got the Dow Jones Industrial Average lower. S&P, NASDAQ, they are both higher right now. S&P up 18 points, higher by about 0.4%. The Dow lower by 11, down now by less than 0.1%, just about flat on the day. But NASDAQ is pushing higher, up 99 points now, up 0.6%. Traders fearing another disappointing inflation report did get a degree of relief this morning after the Fed's favored price gauge was on spot with estimates. Reaction to this morning's data from Julia Coronado, the president and founder of Macro Policy Perspectives.
Looking at the details of this data, it still looks like we're moving in the right direction on inflation, and on the spending side, consumers are still resilient. Came in a little firmer than we expected. Services keep carrying the day. Consumers pulled back on goods spending in January, but are still spending on services. So we still have a very solid economy with falling inflation providing consumers a dividend and resiliency in their spending.
And of course, you can hear more of the conversation on the Talks podcast. You can download it wherever you get your podcasts. 10-year, 4.24%. 2-year, 4.64%. Spot gold right now up 0.5%. 2,045 the ounce. We've got Bitcoin pushing higher now by 2.5% with a 62,000 handle, 62,080 right now on Bitcoin. And crude oil is retreating by 0.7%, 78.02 a barrel. Xcel Energy down the most in almost 4 years after it disclosed that a law firm representing property owners affected by the worst ever Texas wildfire said the utility owner may be responsible for damages. Xcel lower now by 8%. Recapping, we're looking at a mixed Thursday here. S&P up 17, up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, it's happened to all of us, Tim.
You know that seemingly random text you get from an unknown number?
Mm-hmm.
Well, many of those are trying to get you to start a conversation and then ultimately a relationship with the person or whatever, whoever's on the other end. And then ultimately, it leads you to getting scammed out of money.
So how much, you might ask? Well, it turns out billions, many billions of dollars, at least according to a new study. And all over this is Zeke Fox. He's the guy to talk about all of this. He's financial investigations reporter for Bloomberg News. He's also the author of Number Go Up, Inside Crypto's Wild Rise and Staggering Fall. Zeke joins us here in our Bloomberg Interactive Broker studio. First of all, what are we talking about?
Yeah, so these scams where people befriend you and then trick you with like fake crypto apps that tell you they're going to teach you how to trade. They'll even show you that once you send in money, you're making money. They'll even let you take out small withdrawals. Then once they've fattened you up like that, once they get you to send in as much as they think you're good for, they seize it all and disappear. And this professor, John Griffin at UT Austin, he collected thousands of blockchain addresses from victims. Because if you send in crypto to one of these scammers, you have to send it to an address.
Right.
And it's just a 32-character string of like random letters and numbers. But once you have those addresses, you can trace how much money flows through them. So he did that for all these addresses. He saw that generally the criminals sent the money eventually to crypto exchanges where they could, cash it out for real money. And he saw that these addresses that got the scam proceeds got a total of $75 billion over the last few years.
Yeah, it's not million, folks. That was B with a billion.
Yeah. It's totally wild. And I've talked with lots of people who have been victimized by these scams, and you wouldn't believe it, but they'll send in, they'll send in 100,000, 200,000, even millions of dollars. There's a banker in Kansas recently. He got arrested for embezzling from his bank. It appears that he got victimized by one of these scams. He ended up stealing money from the bank, $47 million that he sent to these scammers.
And
apparently.
the bank failed as a result.
Yes.
We had that story
did.
with the reporter out in Kansas talking about this here on Bloomberg Business Week. Zeke, what is the recourse for the people who get butchered?
It's pretty tough. I mean, if you act quickly, you contact law enforcement. If they know what you're talking about, they can contact the crypto companies who will generally comply with law enforcement requests they'll freeze these accounts and they'll turn the money over. The problem is, by the time you realize you've been scammed and you find a police officer who knows what crypto is, the money's probably long gone. So the crypto companies say, hey, we work with law enforcement. We don't want these scammers on our platform. But the fact is, they've created this great way for, a retired person in Iowa to zap, $1 million to a Chinese gangster in Cambodia, which is where a lot of these are run from. And by the time anyone figures it out, the money's gone.
I mean, that's massive amounts of money moving. And I think if it was in a traditional, financial system, it would set off alarm bells somewhere where someone would be like, well, wait, what's going on here?
Yeah, I mean, as part of my crypto research for Number Go Up, I tried to send in 20 grand from Bank of America to buy a Bored Ape NFT, and I got a personal call from someone at Bank of America who's like, hey, this might be a scam. You sure want to send this money? Like, do you know who you're sending it to? Do you know what you're getting? With crypto, I mean, that's part of the appeal. You can just zap it instantly, nobody looking over your shoulder. But that's also what makes it so great for scams.
Remind us where that Bored Ape is now and how much it's worth.
Yes, so his name is Dr. Scum, and I did pay 20 grand for him. I unloaded him for something like 18. It wasn't too bad.
Okay.
And amazingly, even after year has passed, at the last Bored Ape party, weird lasers blinded people. I mean, it's not looking good for the Bored Apes. Dr. Scum would still net you 10, 12 grand now.
The same Dr. Scum that you bought for 20, offloaded for 18, is now being sold for 10.
Yeah,
Poor Dr. Scum.
That's pretty good.
Poor
as
Dr.
far as
Scum.
yeah.
If you're just joining us, this is a real story. We're not making up stuff. You're not crazy. You are listening to Bloomberg Business Week.
Hey, before we get to Number going up, because Number has been going up, Zeke, so while you're here, we're going to get you to comment on that. Take us to Cambodia, what you found in your investigation, because people get these text messages, and they actually, they come from kind of a really scary place.
Yes, I never would have guessed this, but the story behind these messages is really dark. And it turns out that the people sending them are often victims of human trafficking. And I went to Cambodia. I went to one of the biggest sites of these operations in Sihanoukville in the west of the country. They've got a whole office park, maybe 24 towers, each of them holding hundreds of people who are lured there with the offers of high-paying jobs. Then they're trapped, their passports are taken, they have to sleep there, they can't leave, they're beaten if they don't meet quotas, and they're forced to just use fake accounts and troll on social media. I mean, they're just looking for someone who's lonely, who's desperate for some sort of connection, and they use that to their advantage and eventually convince them to send in their life savings.
So what does law enforcement do? I mean, it sounds like you need to have global law enforcement kind of on this, right, to track it down. I mean, how important is it? I'm just curious what you are hearing in terms of getting to the bottom of all of this and kind of controlling it. Because I think this continues to be the problem, right, with anything related in the crypto world, that it's kind of sometimes really hard to kind of get to the bottom of it.
Yeah, the fact that law enforcement isn't really equipped to handle this cross-border crime. The people who are learning about the scam here in the U.S., they don't have any ability to go hunt down the gangsters who are running these scam compounds in Cambodia or Myanmar. I mean, it's become an international issue. Mm-hmm. The United Nations estimates that more than 200,000 people are being held in scam compounds. So this is something that when, the Chinese ambassador visits Thailand, they discuss this and what they're going to do to try to catch these scam compounds. But yeah, it's becoming an endemic problem, and I'm not sure how they're going to fix it.
Yeah.
Okay, Zeke, as promised, we saw crypto had a wild rise a couple of years ago. It had a staggering fall over the last couple of years, and now it's up again. I don't know how to describe this rise, but Bitcoin is higher now than it's been since November 15th of 2021. How are you watching this?
It's really unbelievable. It's it's not just Bitcoin that's going up, right? Dogecoin is doing great. Right. Harry Potter, Shiba Inu, 10x. Everybody's back into crypto gambling again, and you might think that for the prices to go up, that something good must have happened in the crypto world. Nvidia stock price is up a lot because we need lots of these chips to power AI. no one has come up with some reason that we need crypto, but the price is just going up anyway. I would have thought that people would have learned their lesson last time, but apparently not.
And the offering of the spot Bitcoin ETFs, none of that is somehow a fundamental reason. I mean, I'm just kind of playing devil's advocate, trying to understand, once again, this move up.
You know, even with Bitcoin, I feel like eventually, for it to be really valuable, there has to be some use for it. There has to be some reason why regular people are needing Bitcoin in their everyday life, other than just sort of betting on the price going up. And to me, it kind of like calls into question the basis for the rally that it's not just Bitcoin.
Right.
If it was just Bitcoin, it'd be like, all right, maybe that's the good one. But it's like, no, Dogecoin is up too. And like we all agree that one's stupid. No one's trying to claim that there's a fundamental reason for Dogecoin
Some
going up.
underlying asset that has some value?
Yeah,
You could say no.
I mean, I spent, for my book, I spent 2 years, going around the world trying to find some use for crypto.
Yeah.
And I didn't find it, and I haven't seen anybody saying that they found one either. In fact, I feel like number go up has become like part of the even bigger part of the lingo. I hear people using that, pro-Bitcoin people using that as an explanation now.
It's unbelievable. So here we are, with Bitcoin above 62,000. It's pretty amazing, up 48% this year.
That's Zeke Fox. He's financial investigations reporter for Bloomberg News, also the author of Number Go Up, Inside Crypto's Wild Rise and Staggering Fall.
All right, back to World and National News we go. Back to Amy Morris in D.C. Hey, Amy.
Hey, Carol. The House has passed a temporary funding bill to avert a Saturday partial U.S. government shutdown. They are sending the bill to the Senate for a vote that could come as soon as tonight. President Biden may be struggling against former President Trump in the Bloomberg News Morning Consult swing state poll, but he does have a big advantage in the money race. Bloomberg's Nathan Hager tells us more from Washington.
The president's re-election campaign reported $130 million on hand in its latest filing. Now, a political strategist familiar with national fundraising tells Bloomberg News groups backing Biden have already committed to spend more than $700 million to help the president defeat Trump in November. The former president's campaign, meanwhile, is bleeding cash. It spent more than it raised in January, and more than $500 million in legal judgments are threatening to drain the former president's personal fortune. In Washington, I'm Nathan Hager, Bloomberg Radio.
Now, more about that Bloomberg News Morning Consult poll. It finds swing state voters across every major demographic group describe President Biden as too old. It shows concerns about his age have permeated even the most reliable constituencies of the Democratic Party. More on Trump with Bloomberg's Anne-Marie Hordern.
The continuous message is that Biden is just too old. And even before we're getting asked that question, this poll is asking respondents that question. People are writing it in, something they've heard or seen about each candidate. They will talk about Biden's age. So 8 in 10 battleground voters say he's too old. And this also comes after that damning special prosecutor report that described the president as a well-meaning elderly man. We did hear from his physician yesterday, though, that pushed back and said he was fit for duty.
Bloomberg's Anne-Marie Hordern reporting their global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all pushing higher. 20 minutes to go ahead of the closing bell. Let us head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shaw. That's right. U.S. stocks in the green in a choppy session today. The Dow is currently up 29 points. S&P's are higher by 22, while the NASDAQ rises by 0.7%. The U.S. 10-year yield at 4.25%. Gold is up 10, but oil is trading in the red, and Bitcoin is higher by 2.7%. Among the main 11 S&P sectors, leaders were real estate and tech. Healthcare and consumer staples were under pressure, and leaders to the upside in the Dow, Salesforce and Intel, while Boeing and Goldman Sachs led to the downside. After earnings, Snowflake dropped 18%, while Hormel Foods rose as much as 17%, and that's the biggest gain since 2000. Wrapping things up, some of the names pointing after the bell tonight include Autodesk, Dell Technologies, and HPE. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. We're going to be busy, and we've got you covered to hear live breaking news over your Bloomberg. Type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session. Our next guest says investors are living through a bull market and that the bull market is just hitting its stride.
Let's drive to the close with Lauren Sanfilippo, Senior Investment Strategist for Merrill and Bank of America Private Bank. Lauren, good to have you with us right now. You argue that investors are living through a bull market, but it's hindered by negativity bias. What does that mean?
Yeah, I think this setup this year is certainly hindered by an election year, right? There's a lot of volatility and associated volatility and uncertainty. But there's a lot of things to look forward to, right? We have this Fed pivot that's being priced in. Growth is certainly surprising to the upside. The Fed Atlanta tracker for GDP for this quarter, 3.2%. So again, surprises to the upside will certainly matter and I think carry the market through this year.
All right, so kind of interesting. It's funny to hear what you're saying, and I feel like it builds on the guest that we had yesterday, Louis Navalier, right, who was saying that markets are kind of getting ready to, or they're partying like it's 1999, but he wasn't saying that they're the same kind of market. Lauren, having said that, in terms of your broad macro view, what parts of the market do you find interesting?
Yeah, so I think what we're seeing now is still this narrow trade at the top, right? But I think there are other sectors that are doing less bad as compared to last year. So look no further than financials. They're up 7% so far this year. Healthcare up another 6%. So we are expecting this broadening to sort of take place. And I think that certainly will include energy even, right? We can think about getting cyclical for the first time in a while. So that's exciting us, and we're actually making allocations towards those areas.
Wait, can I just ask you though, the energy, and I'm looking at it, it's kind of near the bottom of the pack when you look at the major industry groups in the S&P 500. Out of 11, it's in 9th place, still up about 2.2%. How much of your interest is the consolidation that we're seeing a little bit?
Well, right. So I think that definitely is a factor in it. But I mean, we're nowhere near peak oil demand. There's such good fundamentals, I think, in the energy patch. And, that green transition, it's definitely been tricky. And energy's balance sheets just generally look good. So we think that's an attractive sector where we're looking to put money to work.
What concerns you right now? What worries you and the team?
What concerns me is that we're fairly convinced of this Fed pivot, right? And I think the runway now, 2 months into the year, I think the runway for the March watch list items, we definitely have to get confirmation that PMIs have bottomed, so that sort of needs to come through. I think next week's job report, we're going to be looking at pretty carefully, right, for that other side of the mandate. And I just think every print really on the runway to June, which we anticipate being the first rate cut, we'll be watching very carefully.
It's kind of interesting too, and I'm saying, kind of layering on some of the market conversations that we've had around this table, Lauren, but this idea of profits going forward, maybe expectations are too low for the next couple of quarters, so that provides some good impetus, if you will, to send shares, equity shares higher. Election years, because you tend to have candidates who promise you everything, tend to ultimately be pretty good. And I think that there was one more, was it the kind of Fed being maybe done, kind of put it all together, and that basket really provides maybe a very good environment, certainly for more equity momentum, which you argue for.
Yeah, you know, I think it's interesting. Election year, I actually think, is an opportunity to be smarter than the rest. And I talk to clients all the time who feel skittish in this environment, right? But I think the underlying idea here is just to stay invested. And actually, that is smarter than the rest. So I think, you know, that's really the main tenet for this year.
So it's so interesting to hear this from you, because this is the conversation that it really seems like the conversation has pivoted. And it feels like, at least to me, Carol, that more and more of our guests lately have been optimistic than pessimistic. And something has really shifted in recent weeks.
Well, and I think some of it, Lauren, how much, Tim brings up a good point, and we talk about it all the time. Here we got, the Fed's preferred inflation gauge, right, and what it tells us. And, it's still, not exactly where the Fed wants it to be, but we're way down from where we were a year ago, and it didn't come in hotter than forecast. Having said that, this clarity that maybe we're getting when it comes to Fed policy, right, that the Fed, despite some outliers saying we could actually get higher, some more rate increases, for the most part, the market is just saying it's not if we're going to get rate cuts, it's just a matter of when. And that does provide some clarity about the outlook.
Yep, it's a question of not if, but when. Totally agree with you on that. And, core this morning, headline running at 2.4. Headline running at 2.4, core running at 2.8. What's interesting about that is that actually that's where the Fed thought that those measures would be running by year end, right? So come March, we're going to have to see their update, their new rendition of the summary of economic projections, their dot plot. So I think a recalibration, you're right, does need to happen. There's a lot of bullishness out there. It's actually a little bit tougher to find a bear, right?
It is, and that has me wondering if there's a contrarian signal there.
Yeah, I think perhaps we don't think so. We're in this bullish camp. I mean, I understand the hesitation when everyone's sort of on one side of the boat, right? You wonder, right? I totally understand that hesitation. And I can remember last year when strategists, economists were all forecasting for a recession, right? And that never happened. So I'm with you. But I do think that earnings, basically what you were talking about, Carol, 11% earnings growth for this year. I mean, that's going to drag the market higher, right? It might be a bit lofty. We at Bank of America think we're looking at maybe 5 or 6% growth for this year, but again, that's still pretty good growth after that earnings reset that we got last year.
Well, and the other thing is, Lauren, nothing's ever in a vacuum, right? So you're looking at the U.S. as a developed market compared to other developed markets around the world that are not, it's not going as well as it is in the United States. So investors who can choose anywhere. Having said that, do you see any kind of overvaluation when you look at the U.S. market, anything getting a little bit too hot that makes you a little bit nervous? I think about the Magnificent Seven. I think about, the AI names, the big tech cap names, anything that you say it's okay to maybe take some money off the table. I hate to use that expression, but any areas that you think are a little hot and that a little bit of a correction will make them more attractive in your view?
Well, that's an interesting point, right? Because international is breaking out now to some all-time highs we've seen on their indices for some time. And we're definitely getting questions from clients now on when international will come back. I think all along, though, there's been some quality companies to look at, like even in Europe as the example here, right? I mean, you're seeing actually a very concentrated trade happening there. It's sort of like the Magnificent Seven in Europe. So that's certainly playing out. And, Europe can be in recession, and their multinationals are leveraged to the U.S., right, and the U.S. consumer. So as a benefit, really, those names can work. So I think we're seeing a little bit of that now, and maybe global growth is even bottoming.
All right, going to leave it on that note. Hey, Lauren, thanks so much. Thanks for dropping by and sharing your view with us. Lauren Sanfilippo, she's Senior Investment Strategist over at Merrill and Bank of America Private Bank, joining us in New York City. And folks, we've got, what did you say?
Yeah, stocks close to highs right now. The S&P 500 up 0.5 percentage point. The NASDAQ Composite up more than 0.7%. The Dow in the green now after much of the day in the red.
I really do feel like that sigh of relief. We're getting through most of these data points, and then we're going to move on to next week and Jay Powell and what he has to say that might shake things up a bit.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
From the UK, and I'm the inventor of the Gel Razor. And today I'm looking for an angel investor to fund my project, the Gel Razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision, that's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the Gel Razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile. Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
With Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, in just a few minutes, we're going to head over to our TV colleagues, count you down to the close on this Thursday, February 29th.
Are we going beyond the bell today? We're going beyond the bell.
On this leap year.
We're going beyond the bell. It's February 29th, which makes me, it's a little spooky.
Why is it spooky?
You know, it doesn't happen every year.
Just another day. But then is it really March 1st?
Does
it make
today.
tomorrow March 2nd?
Just means there's an extra day this year.
Saying.
It's a leap year.
Yeah, if you're boring, you know it. It's really kind of cool.
That is pretty cool.
I mean, yes and no. And then you can celebrate your birthday twice or 3 times. We're just getting random on this Friday's Eve. Let's get to one of the most read stories on the Bloomberg as we wait for the close. This story about the golf escape for the super rich topping the muni market for $40 million.
Yeah. So we're talking about a luxury resort developer, Cabot, believes that Florida needs a few more golf courses, despite the fact that it already has 1,200.
Has a lot.
So it's a Canadian company. It has grand plans to build a resort community for the richest residents, stretching over more than 1,000 acres, equipped with as many as 84 holes of golf, 980 residences, upscale restaurants, nature trails, swimming pools, spa. And you know what you need? A shooting range.
You know what you need? You need the muni market.
You need $40 million bucks.
So the development expected to receive $40 million of municipal debt in a sale by a special district today. I haven't seen the proceeds or the results of it. Dill's going to raise funds for infrastructure like roads and utilities, marking the first installment in a series of planned muni sales for the project. So this is just one, but I guess there'll be more.
We're talking about the Cabot Citrus Farms development. It's going to sit on the site of World Woods Golf Club, once considered one of America's greatest courses in Hernando County, Florida. It's about 63 miles from downtown Tampa. It's a complex that's home to Pine Barrens and Rolling Oaks golf courses, and it's on a rare strip of rolling Florida terrain.
You know, net, this company, Cabot, part of a wave of investors and developers betting that a pandemic resurgence in golf will continue. There were more courses under construction at the start of 2024 than any time in the past decade, according to the National Golf Foundation. Florida's home to nearly 28% of those new projects.
I remember talking to a friend of mine during the pandemic,
Golf
like
is
in the
over?
worst of the pandemic, and he lives in Florida and he's in Naples, and he was like, yeah, I'm golfing every day. It's like the perfect thing to do. We're outside.
They thought golf was gonna just go away.
No, it hasn't.
It ain't happening, and it's tapping the muni market. All right, folks, don't go anywhere. Heading over to our TV colleagues, going to count you down to the close on this Thursday, Beyond the Bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast. Joined now by Scarlett Fu here in Studio 2, Carol Master, Tim Stenivek, helming our radio studio as we welcome our audiences across our multitude of Bloomberg platforms. Happy Leap Day, Carol and Tim, and a happy day in the markets.
Yeah, absolutely. Great, right? The inflation report coming in just as expected, didn't come in hotter, so I think everybody's like, whew. I will say one of the sectors that I've been focusing on is the semiconductor sector, because it's definitely outperforming, guys. 2.8% to the upside. You've got all 30 names in the stocks trending higher, and this is thanks to Citi, which was out with an upbeat report and talking about a lot of names, some of it because of AI, and that's going to be good for semiconductor companies, but man, outperformance there, Tim.
Why is Bitcoin up again? That's what I want to know. Up 2.7%. Today, Scarlett. It's the highest it's been since November of 2021, so we keep going back to those superlatives more than 2 years ago. We had Zeke Fox on the program talking about the, scamming, pig butchering, and he wrote number go up, so we had to ask him about why number keeps going up for Bitcoin. Yeah. And he reminded us it's not just Bitcoin. A lot of other cryptos are moving higher, too.
You know why?
And he didn't have an answer. He did not have an answer as to why.
Momentum.
Yeah.
You don't really have to have an answer beyond it's
Yeah.
up because it keeps going up
Just
and other people
because,
expect
right?
it to go up. Yeah, absolutely. And then there's just the whole supply-demand dynamics as well, particularly with that halving coming up and all these ETFs that are basically scrambling over like 5 crumbs on the table to see who can get it into their ETF before the price goes up to like $1 gazillion there. Anyway, a pretty decent day in the markets. Definitely a really great month here in the markets as we get the closing bells here on this Thursday afternoon. Let's walk you through the numbers, and there are some big numbers indeed here. We start off with the Dow Jones Industrial Average, which is going to finish the day in the green, only fractionally, up about 0.1%, but it is going to close out the month up about 2%. The S&P 500 up 0.5% on the day, 26 points, right around that 5,100 mark, capping what's going to be about a 5% gain here in the month of February. The NASDAQ Composite up about 0.9%, up 6% here on a monthly basis, and the Russell 2000 outperforming here, or outperforming most of the other major indices here, up 0.7% on the day, and about 5.5% on the month.
All right, to the S&P 500 we go. Most names, or a majority of the names, I should say, higher in today's trade. 314 Scarlet to be exact. To the downside, 185 for unchanged.
All right, let's take a look at the sector performances and the traditional sectors, the ones in which big tech are represented, are doing the best here. You've got communication services, infotech, and consumer discretionary, each gaining at least 0.9%. Your weak links are healthcare, consumer staples, and financials, but that's an awful lot of green there.
Yeah, exactly. All right, let's get to it in terms of some of the individual gainers. Or do we want to do Autodesk, guys? What do you want to do?
Autodesk.
All right, let's do the Autodesk. Okay, fourth quarter adjusted operating margin, 36%, a little bit better than what the street was expecting. 35.9% was the forecast, so coming in at 36%. Fourth quarter net revenue, $1.47 billion. That too, a little bit better than the forecast of $1.43 billion. First quarter revenue outlook. This is what we care about. $1.39 billion to $1.40 billion. The estimate was $1.39, so maybe Scarlett upping it a little bit. And let's go back to fourth quarter adjusted EPS, $2.09 a share, folks. That's a beat. That's 14 cents better than what the street was expecting. And one more for the outlook. First quarter adjusted EPS, here's the range, $1.73 to $1.78. That looks like it's lowering it, the street right now at 178, but Scarlett, the stock is up almost 6% here in the aftermarket.
And it's doing so without a headline about a share buyback or a dividend. I almost expected to find something like that.
Okay, but there is stuff in here about AI, we should note. The company's president and CEO saying that that Autodesk has led the industry in generative design, and they're leading again when it comes to 3D generative AI. They've got a new multimodal foundation model that's going to enable design and make help customers automate low-value and repetitive tasks and generate more high-value, complex designs more rapidly and with much greater consistency.
Yeah, and this gets to this idea too, and you have NetApp also moving. This idea here of kind of the tale of two cities with a lot of these application and enterprise software names here. This idea here that some are definitely going to do well because they already have that moat around them, but those others that we talked about yesterday, which don't have that moat, not doing well at all.
All right, on the flip side, you got B. Riley cutting its quarterly dividend to 50 cents a share. That's from $1. That stock is down by 19% after cutting that quarterly dividend. They also hire Moelis to review some options, and they're delaying their annual report on form for their 10K. So I think you put those together, that doesn't look very good for B. Riley. Cutting their dividend, looking at options, and delaying their annual report.
Yeah, and this all goes back to that prophecy asset management collapse back in 2020 here, and they've really never been able to get out from under that. This looks bad, guys.
All right, so let's go back as we continue to monitor any new earnings come out. We'll bring them to you as soon as they are known. Let's get to some of the individual gainers. Among those top in the S&P 500 and the NASDAQ, I talked about the Citi call, very upbeat call on the semiconductor sector. AMD was number one gainer in the NASDAQ 100, and it was the number 3 gainer in the S&P 500. What Citi said is it continues to see strong prospects for the sector given tailwinds like artificial intelligence. Surprise, everyone. So AMD, we definitely saw that one. Higher in today's trade. You can see it up, about 9% here in this session. I'm going to go from high tech to low tech. Hormel, number one in the S&P 500, posting its biggest intraday since I think about May of 2000. The meat producer reported its biggest earnings per share beat in 10 years, everyone. So since at least the second quarter of 2013, according to our data. Company also reaffirming its guidance, so that stock up almost 15%. And then Monster Beverage, a top gainer among the NASDAQ 100, that one also moving to the upside, up more than 5% here. The company coming out, fourth quarter gross margin, beat consensus estimates. Analysts saw the results as solid overall, highlighting that gross margin beat in the quarter, as well as a strong start to the first quarter. So investors moving into those names pretty aggressively, Tim.
Okay, let's look at what happened at the other side of things with the decliners of the day today. Starting with Xcel Energy on the downside, more than 8.6%. This over the worst ever Texas wildfire helped send shares plunging because a law firm said that it might be linked to the disaster. It's the latest sign that potential ties between power companies and blazes are triggering volatility in utility stocks. Xcel did say in a filing that it's working with emergency response personnel to provide assistance. And then Chemours stock plunging to its worst sell-off on record after the company suspended its top 2 executives and put off reporting its fourth quarter results for the second time this month. Shares finishing the day remain down by 31%.
Yeah, a wild story there. More earnings, though, crossing the wire. Let's get right to it. This involving Hewlett-Packard Enterprises, HPE. First quarter net revenue, $6.76 billion. The street was looking for 7.1. A miss on the top line. As far as the bottom line, a modest beat here at 48 cents a share on an adjusted EPS basis. The street was looking for 45. The guidance for the second quarter, not looking a whole lot different. It looks like it's going to be light, 36 cents to 41 cents. Streets was looking for 45 cents on average here, and the full year adjusted EPS estimate also coming in, at least on the top end of that range, below what the street was looking for on average.
All right, and you can see Hewlett-Packard shares down about 1.6% at the moment, extending those declines. There's another set of results out from Zscaler. This is a cybersecurity software company, and it was a beat and raise quarter for Zscaler. Second quarter revenue, fiscal second quarter revenue, $525 million. Analysts were looking for about $508 million. Zscaler's adjusted EPS of 76 cents tops the average analyst estimates, which was 58 cents, and it sees third quarter revenue of $534 million to $536, when analysts were looking for somewhere in the range of 532.
Well, I'm looking at shares at Dell right now that are shooting higher in the after hours, up by more than 10%. This after the company boosted its quarterly dividend to 44.5 cents per share from 37 cents per share. Estimates were for 41 cents a share. Fourth quarter adjusted net revenue coming in above estimates at $22.32 billion, beating estimates of $22.14 billion. Shares higher by 7.8%.
And I just want to say, just looking at some of the commentary from both of those companies and also from HPE, we're seeing like commentaries about AI and the significance of it, so that continues. Quick check on something that's, again, low tech. Sweetgreen coming out and giving some forecasts. Sees 2024 adjusted EBITDA of $8 million to $15 million. The estimate out there is 9.2. 2024 revenue, $655 million to $670 million. The estimate is $663.5 million. Always key, first quarter same store sales, so we're getting some outlook about 3%. The estimate was 2.34%, so that's better than forecast. And just quick looking backwards, fourth quarter revenue a little bit better than forecast, $153 million, and fourth quarter loss per share 24 cents, and the estimate was for a loss of 23 cents, Alex. So a little bit to the downside on that one. But Sweetgreen, people may be liking that outlook, up about 7.6%.
I
don't know
I was actually going to order Sweetgreen today. I even went so far all the way to the order page.
Me too.
And then when I saw the final price, I was like, eh.
Yeah, but that's, you know, I had the exact same experience, and I paid $26 for a salad. It was not from Sweetgreens, but I realized it was the delivery and stuff. I got to get my butt outside. I haven't ordered in food for like 5 years, and this is the first time that I've done it. But I'm telling you, Ozempic effect, man. The weight loss drug is going to help these guys.
I love me some Sweetgreen. That's all I'm going to say. All right.
Really? Are you going to buy some from ours tomorrow?
For
I mean, it is Friday.
$26 a salad.
Sweetgreen for everyone, Carol? Is that what I heard?
A little static on the line. I can't hear you guys right now. All right, guys, that's a wrap. Some earnings after the close. We'll continue, of course, on both sides to cover it. That's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again beyond the bell, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenivek. Those earnings, Carol, fast and furious, even though we're at the end of our earnings season.
Not quite, Tim, but, you know, it's just a reminder that, you know, everybody's got to get their numbers in and, you know, kind of a mixed bag. It's amazing, though, when we were going through, like, HPE and going through Dell, like, if you look at the commentary, every CEO is mentioning something to do with AI.
Well, Dell shares up, Carol, by 130% since the start of last year. And before this report came out, analysts were concerned that there wasn't room to run higher. Well, to that, Dell says after hours shares higher by 14.6%.
Well, they felt confident enough to boost their quarterly dividend as well. So it sounds like everything is awesome.
Is everything awesome?
AI awesome.
Is everything awesome?
Not
because
necessarily.
there are a lot of people out there who worry about money. In fact, if you worry about money, you're not alone. A new study from Wells Fargo says that more than half of Americans, 56% in fact, say they always worry about money, even when they have enough.
Yeah, 2/3 of Americans have decreased their spending due to the economy. These are just a couple of the nuggets in the Wells Fargo Money Study. It's a new study out from the bank. And lucky for us, Michael Learsh is here. He's head of advice and planning at Wells Fargo, joining us here in our Bloomberg Interactive Broker Studio. What?
Okay, is this just the human condition? That no matter how much money somebody has, they're going to be worried about money?
There's an element of that, but part of this is also the narrative out there about what money means. And you see it in social media, you see it in conversations, which is money might not be taking us as far as it used to. And so that's creating, actually in our study, it actually creates an extraordinary worry beyond what people said they worried about when they were younger.
Yeah.
We were just talking about this with our TV crew.
Yeah.
About the price of eating out for lunch or the price of getting a salad delivered.
Right,
It's
not
like sticker shock for a lot of people.
It is. It's kind of ridiculous. Or buying a pizza, and you're like spending $50.
You,
You're like,
you give me such a hard time for hoarding snacks upstairs here, where they're so generous with their snacks here. Like you walk by my desk and it's just like it's a buffet of free food.
Snackapalooza.
Yeah.
No, but it's interesting what you say about kind of how we think about money. What is? I've often thought about in a society where increasingly aren't handling cash. Like, are we getting distorted that we just kind of digitally doing everything? Then all of a sudden we're like, oh my God, where did it all go? But anyway, tell us more of what you.
Well, there's a piece of that. I mean, we ask people what they do every week, and they said things like spend 9 hours scrolling social media and 3 hours a week looking at their money. So to your point, we are actually not looking at our money as much as we used to, because remember when we used to have like clips that would put our money in wads and we put them in our pocket, or we'd actually, to your point, take out the cash, get change. We'd have a piggy bank.
When I was a kid, my parents taught me how to balance a checkbook.
Yeah.
And like if I didn't balance my checkbook at the end of the month.
Did you get in trouble?
Yeah, I would get in trouble. And my parents would be like, okay, where did the money go?
So we asked teens actually about their anxieties related to money in the survey, and we do something called the Talk Aloud protocol, where we just have conversations like this.
Yeah.
And one of the teens said they didn't even know what a bank account was, and they wanted us to explain it to them. So you're spot on. You're right. It's not the typical thing these days.
Michael, I feel like in my whole career, there's a couple of things that we've always talked about: more women in executive suites, and diversity and the importance of that, and yet we're still struggling with some of this stuff. But the other thing is financial literacy and the importance of teaching kids at a younger generation. I feel like kids, I don't know whether it's grade school, whether it's middle school, but somewhere home economics has gone to the wayside, but we need financial economics being taught in schools. We talk about it, why aren't we doing it, and what the impact could be?
Well, what's important to think about is, where do teens and young people want to get the information? We ask that question, and where they get it.
Yeah.
And they do get it from their parents. So that's where they want to, and that's where they actually get the information. So we can look to, let's say, third parties to give our kids that information, but really they're looking to their family units to provide information about money, information about saving and investing, what to do with it, what constitutes things that are aligned with your values versus misaligned, and teens want that information. And actually, they said they want it from their parents, but they're also looking to banks to provide the information too.
But don't you think about it, like we talk about, so if your parents aren't great managing money, then you pass on those bad habits. So I just wonder, how do you break kind of the
I
chain?
see a lot of stories about that.
Absolutely.
People are
Like,
pretty open on social media with stuff like that, and also like how they break those habits, which is difficult.
Well, one of the toughest habits that teens said that they observe and they do themselves is lying about money. How much they spend, how much their house is worth. So adults admitted to doing it, but teens admitted to doing it even more than adults. So we can say, well, what's going on, to your point, behind the scenes? How do we get past it? And what people say is there's just not a lot of money conversations going on in their families at all. So it's still something we're reluctant to talk about for whatever reason.
It's also, I think, hard, like, as a parent of young kids, it's kind of a hard thing to talk about, because like, for example, I'm out with, my son who's 5 and he wants a snack, and I'm like, no, you can't have a snack. Like, we can't buy a snack every time we leave the house.
Right.
And he's like, is it because you don't have any money? And I'm like, kind of. I mean, yes and no.
We have money.
One time he told me to go to the money store. He's like, can't you order some money so we have money?
Well, money does grow on trees, doesn't it?
Apparently it does. Hey,
I like the way he thinks.
We can learn a thing or two from young kids, right? You break this down into different categories.
Mm-hmm.
One of the categories you define is the young affluent.
Yes.
Who are the young affluent?
So when we think of young affluent, think of 20-somethings. And when you think of 20-somethings, think of human beings who have anywhere between $250,000 to $10 million in assets. So it's a broad range of young people who actually are earning a lot and saving and investing a lot. Maybe they own a home.
That's impressive.
And
Yeah.
what was very impressive about them is they're the most likely to want to do things like plan, not delay their life because of money, but they want to be more and more intentional about it. So they seem to be one of the more optimistic and planful groups of any of the groups we talk to.
I am wondering, in terms of this survey, and Michael, you know it, you're over at Wells Fargo. We are constantly, whether it's government data points on consumers, how they're doing, how they're spending, whether we talk to CEOs, consumer-facing CEOs, we've done that a lot, certainly this earnings season. But I'm wondering what this survey helped you kind of say about the financial health of consumers or society right now.
Two things. One is that Americans are relentlessly optimistic. And so what the majority of our survey participants told us is they wanted to stop talking about problems. And so when you think of concepts like financial health, that's nice, but what they wanted is this solution. Less of an assessment, more, well, tell me how I should be thinking about money, what I should be doing. The second thing is they're very eager to do things like figure out how to stick with a saving and investing plan. It's not that they don't know that that's important, it's just how do you stick with it? And they often think you have to do in big bite-sized, large chunks rather than little bite-sized chunks. They think bite-sized chunks don't matter. So we have to reframe that as, financial services professionals, little tiny changes actually lead to big, extraordinary outcomes over 2 or 3 years. And I'm sure you see it. Your child probably sees it if you put a couple quarters, if you were able to do that these days, in a piggy bank. We all remember this. A month, 2 months, 3 months later, you could buy a toy. These are the types of things we need to start re-engaging in.
Fortunately, lollipops at swim class are 25 cents still.
Yes.
So there are some lessons. Too? Swim classes are not. Swim classes, I'm not even going to get started on how expensive swim classes are. Hey, before you go, Michael, this is the first time that Wells Fargo has done this. So there's not this idea of comparing it to what's happened, what the research has said in previous years. But still, can you offer us any differences from earlier generations or how this thinking has changed?
Well, so the thinking has changed in terms of Americans not wanting to feel judged by others or by themselves about money anymore. And that's something that I think people were more willing to accept. I think social media has got us more aware that that's not a great behavior. And the second thing is they really want to set goals. And so we have a capability called LifeSync in our mobile app. And what it does is allows you to actually say, I want to manage credit and debt. I want to manage my spending. You can upload pictures to inspire you. So people want to be more inspired. And so that's where it's changing. People want to shift from pessimism, talking, let's say, badly about themselves or judgmentally about themselves and move toward optimistic ideas.
I think those apps and so on and so forth that kind of help you track your spending, kind of set your goals, can be really, really useful. I was just going to say there were a bunch of kids just outside our studio.
Is there like
so
a
I didn't know if that was part of your survey or...
Maybe I know them and I don't realize it.
Or maybe they have something to add.
Our healthcare team leader, Cynthia Coons, and her kids.
A couple of juice boxes there. It was really adorable. This was fun. Very interesting.
Thank you so much for having me.
Really appreciate it. Michael.
Good to see you too.
Yeah, Lairsh, Head of Advice and Planning over at Wells Fargo, joining us here in our Interactive Broker Studio. You're listening and watching Bloomberg Business Week. Carol Massar, Tim Stanovic. This is Bloomberg.
It's 421 on Wall Street. We've got you covered on markets all day long. I'm Charlie Pellet. Do want to begin with a red headline right off the Bloomberg Professional Service involving New York Community Bank. NYCB says it did identify material weaknesses in internal controls. After hours, shares of NYCB now down by 7.5%. Lots of earnings after the closing bell. Dell Technologies surging 17.8% right now. It did report better than expected sales and profit as corporations appear to be updating their information technology equipment to meet AI demand. Again, Dell after hours up now by 18%. Also reporting Autodesk shares now higher by 6.5% after fourth quarter adjusted EPS and net revenue both beat. Right now we've got shares of Autodesk up by 7.7%. HPE, Hewlett Packard Enterprise, has reduced its outlook for sales growth and profit in the current fiscal year, citing lower demand for networking products and a crunch in computer chip availability. HPE after hours now down by 4.1%. Of course, we got you covered on earnings. A lot more on HPE coming up in just a moment. Stocks higher across the board today as we wrap up the trading month of March. It is the trading month of February. It's a leap year. We are on to the trading month of March with the S&P up 26 points today, up 0.5%. Dow Industrials up 47, up 0.1. We've got NASDAQ up 144, up 0.9%. 10-year yield 4.25% with a 2-year 4.62%. Spot gold up 0.5%, 2,043 the ounce. Bitcoin up 0.8%, 61,018 on Bitcoin. And West Texas Intermediate crude down 0.8%, 78.31 a barrel. So again, recapping, after hours, we've got shares of HPE down now by 4.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, just going to stay with New York Community Bank for a moment. The regional bank that is headquartered in Hicksville, New York. It's about a $3.5 billion market cap. Stock is down, as Charlie mentioned, down about 13% in the aftermarket. New York Community Bank Corp saying it's delaying its 10K filing after identifying a material weaknesses in the company's internal controls related to internal loan review. That 10K, of course, its annual check, if you will, on its financial status, that filing that it does as a publicly held company about its financial performance required by the SEC. The company also with a new CEO now being named, Alessandro Danello, becoming president and CEO, so taking over from, I believe, Thomas Kangemi. The company saying it's identified material weakness in internal controls related to an internal loan review resulting from ineffective oversight risk assessment and resulting from ineffective monitoring activities. So again, GAAP requires goodwill impairment of $2.4 billion in the fourth quarter. So that assessment on February 23rd. No impact, though, on any of the company's regulatory capital ratios, always key for a bank, and says the impairment did not result in any current cash expenditures. But nonetheless, that stock, Tim, is down 14% in the aftermarket.
Yeah, down about close to 60% from late January when those concerns were first brought to everyone's attention.
All right, from New York Community Bank to HPE we go.
Yeah, shares down about 4.2% in the after hours. This after the company reduced its outlook for sales growth and profit in the current fiscal year, citing lower demand for networking products and a crunch in computer chip availability. We got with us Crawford Del Pred, president of IDC. And he caught up with the HP CEO right after the results. Crawford, good to have you with us, joining us from Massachusetts this afternoon. First of all, your thoughts on the quarter and on the company reducing its outlook for sales growth for the fiscal year. And also, what did you hear from Antonio Neri?
Yeah, absolutely. Carol, Tim, great to talk to you guys again. So when you look at HP, I think that the first thing you have to think about is that this isn't the old HPE that we've kind of known. This company has been going after the networking space and has really been succeeding in the networking space for a number of quarters. And if you look at where they were over the last, I think, 6 quarters, they were growing their networking business, which is primarily a company they bought a number of years ago called Aruba Networks, which is sort of campus networking and networking out at the edge of the network. That was growing in excess of 30%. And so, like we saw at Cisco, you've seen that we've pushed a lot of product out to customers, and customers have said, you know, we're going to take a pause here. And so they've taken a pause, and HP saw their networking business, what they call their intelligent edge business, which is the majority of the networking business, up about only 3%, which compares with the 30% kind of range. So, that's kind of one big part of the story here, is that the intelligent edge has dropped down. The other part of the story is that obviously, from a total growth standpoint, the company didn't even deliver on the low end of their range. So they were down 14%, and that was fueled by what I would say was weakness in sort of that core server space, which was down about 23% in terms of total revenue. And so what I heard from Antonio, understandably, is that they've taken a tremendous amount of cost out of this business. And so from a margin standpoint, I think that, from a defensive standpoint, they've made a lot of progress. And that's really what they did, was to hedge against the cyclical nature of the business. Also hedging against the cyclical nature of the business, and rightly so, they've seen 41% in their ARR growth. So people think of HP as a gear company, but really they've got a platform for them to sell as a service gear, as well as services around that gear. And that business continues to grow. And over time, as we have seen, we'll continue to see that deferred revenue accrue to HP's revenue stream. So, again, it was a mixed quarter. Definitely a pause on the part of a core part of their business that had been fueling growth. And, I think that this is where they're playing a little bit of defense.
Yeah. You talking with Antonio Neri, the CEO, and I guess our folks did too, and saying that downward revision in terms of the outlook is due primarily to that slowdown in the networking market and a lack of availability of graphics processor units required to deliver high-powered servers. Telling all of those, we're talking about GPUs, right? And he did say it looks like should improve in the second half of the year. The networking market is poised to recover in fiscal 2025. He said, what was top of mind for you as you talked with him, Crawford, about
Yeah, so as I talked to him, top
know?
of mind for me is, thanks, Carol. So top of mind was, sort of why is it that, and when do we expect GPUs to get better? And what they've seen is a significant amount of bookings. I think they have, a significant amount of AI bookings in the quarter. I think they're going to be working down a set of AI bookings as they get, I think it was a number somewhere around 3 billion that they're going to be working down for customer commitments that they already have in place. And so, I think what you're seeing is similar to a lot of companies in that we are seeing a massive infrastructure upgrade within customer sets. And it's really about who can get availability, who's got the scale. And I think that ended up being, one difficulty point for HP in the quarter, in that, the availability just isn't there. But I think that, we saw announcements from Intel, we've seen announcements from AMD. I think we're going to see a significant availability in the second half of the year. And that, I think, is going to fuel a sustained set of growth. And Antonio talked about that for the infrastructure space as we get into the later part of the year. And I think IDC's numbers reflect that. We expect the server and storage market to deliver somewhere between 6 to 8% growth this year, and that's going to be fueled on AI.
Well, that's exactly what I want to talk about, Crawford, was HP's exposure to AI. And I'm wondering this from the perspective of, okay, we know that IT spend is going up this year, and I know there's a lot of talk of a lot of that spend going toward companies like NVIDIA, companies like Supermicro. To what extent is HP a beneficiary of the run-up in AI?
Oh, they're a massive beneficiary, and they're a massive beneficiary. By the way, as are Dell and as is companies like Lenovo, other infrastructure companies. HPE is a little bit different, and they're different because of the bets that they've made around the network and the edge. So they are going to be able to provide devices that are going to be processing at the core, which is their core server business. And don't forget, these guys have a very, very large footprint in supercomputers, which is going to be another area of AI growth and AI investment going forward. As well, at the edge, where I think we're going to see more what they call inferencing at the edge, being able to process at the edge in order to make decisions very, very quickly on your data. They're going to do that through Aruba. And they're going to do that through an acquisition that they just made with it that they've announced, which is Juniper Networks. As well, they're going to be able to benefit from what I would say is the need for more ports because of AI, right? So as AI continues to proliferate, you're going to need to move more network, you need to move more data across the network, which means you're going to need more advanced switching technology. And that's where their Juniper acquisition is going to come in. So you need to think of it as opening up the interstate highway.
Right.
You need to open up the interstate highway, and HP is going to benefit from that as they close the Juniper deal from those three, core, edge, and network.
Hey, listen, real quickly, because Dell came out, its stock is taking off big time in the aftermarket. They reported better than expected sales, the topped estimates on AI server excitement. How do you contrast what we're hearing with Dell versus what we're kind of hearing kind of on the HPE side? And just got about 20 seconds.
Yep. So I think a couple of things. I think that Dell had probably better availability and was able to get better sell-through on GPUs, which again, late-breaking news here. The other is Dell doesn't have the same level of exposure to the networking market, which is what we kind of just talked about. So Dell's able to really benefit, if they can get them, by selling these GPUs.
All right, great stuff, as always. Crawford, thank you so much. Busy afternoon for you, and really appreciate you carving out some time for us. Crawford Del Prete, president of IDC, joining us from Massachusetts. Shares of HPE down about 3%. Dell is up 16% in the aftermarket.
Wow, let's go from New York to Washington, D.C. now for a check of the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom. Hey, Amy.
All right, thank you, Tim. Hello. The House has passed another stopgap spending bill to avert a government shutdown. The latest deal extends the deadline by another week for agencies that were due to run out of funds this Saturday. The rest would face a March 23rd deadline. The Senate aims to pass it tonight. We're watching that for you. Swing state voters across every major demographic group describe President Biden as too old. A Bloomberg News Morning Consult poll has found it shows concerns about his age have permeated even the most reliable constituencies of the Democratic Party. More on Trump with Bloomberg's Anne-Marie Hordern.
Also, when it comes to the former President Donald Trump, he would face a lot of issues and voters not willing to go out and vote for him if he was convicted. So that is why that issue yesterday with the Supreme Court coming out and talking about that they're going to take up this immunity case for the Trump campaign, that delays a key court case that he is dealing with because he wants to extend that well past the November election.
Bloomberg's Anne-Marie Hordern. Still, Donald Trump continues to lead Biden in all 7 states, most likely to decide the election. Their paths will not cross, but both President Biden and former President Trump are visiting the U.S.-Mexico border today. Biden will meet with Border Patrol agents and local leaders in Brownsville, Texas. Trump is scheduled to speak in Eagle Pass, Texas. In fact, he's speaking right now. A new study shows a possible reason why some COVID patients suffer from brain fog long after they recover. Suggests the virus damages blood vessels in the skull. Baylor infectious disease experts, Dr. Peter Hotez.
We have to stop just thinking about COVID-19 as a respiratory virus and realize it's very much a cardiovascular virus.
Baylor infectious disease expert Dr. Peter Hotez says some researchers are concerned it could lead to long-term problems with memory and thinking. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
From the UK, and I'm the inventor of the Gel Razor. And today I'm looking for an angel investor to fund my project, the Gel Razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did that all in one. The idea is you pressurise the handle. The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I want it to succeed myself. Patented in the UK in 2021 September with copyright protection. I have a logo for the Gel Razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
And a crunch in computer chip availability. After hours, we've got shares of HPE Hewlett-Packard Enterprise down now by 2.8%. Turned out to be an up day for the Dow, the S&P, and NASDAQ today. Not just an up day, but in fact records for both the S&P and NASDAQ. S&P at 5,096 as we wrap up the trading month of February and move into March. Today, that was a gain for the S&P of 0.5%. NASDAQ up 0.9%, also at a record of up 144 points. The Dow up 47, up 0.1%. Lauren Sanfilippo is Senior Investment Strategist for Merrill and Bank of America Private Bank. And right here on Bloomberg Business Week, she says there are reasons to be optimistic.
There's a lot of things to look forward to, right? We have this Fed pivot that's being priced in. Growth is certainly surprising to the upside. The Fed Atlanta tracker for GDP for this quarter, 3.2%. So again, surprises to the upside will certainly matter, and I think carry the market through this year.
10-year yield, 4.25%. The 2-year, 4.62%. Spot gold today up 0.4%. $2,043 the ounce. Crude down 0.3%. $78.28 a barrel. Bitcoin up another 0.9%. 61,106 on Bitcoin. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, swing state voters across every major demographic group described President Joe Biden as too old. That's according to a Bloomberg News Morning Consult poll. And it shows that concerns about his age have permeated even the most reliable constituencies of the Democratic Party. Joining us now for more on the Bloomberg News Morning Consult poll and series of polls is Gregory Cordy, Bloomberg News White House and politics reporter. He joins us from our Washington, D.C. bureau. Gregory, good to have you with us. So this is part of a series, and it's the latest in a series that Bloomberg News and Morning Consult have done. It's very interesting because Joe Biden and Donald Trump are not actually that old, but the way they're perceived by the folks you guys in Morning Consult polled is quite different. Explain.
Yeah, they're 4 years apart in age. Biden is 81, Trump is 77, and yet 8 in 10 registered voters in the United States said that Biden was too old, and only less than a majority said that that same term could apply to Donald Trump. And so age is more than maybe just a number. You are also seeing in a separate question, we asked which of these guys is healthier, and the consensus was that it's Donald Trump. And so there is a real difference in the polling on that, despite how close they are in age. Absolutely.
I do want to note, as you point out in the piece that writes up these results, the survey was taken after that special prosecutor's report a few weeks ago that cast President Biden as a, quote, elderly man with a poor memory.
Yeah, it was a sympathetic, well-meaning elderly man with a poor memory, but an elderly man obviously stuck in people's minds. And we actually saw that. One of the things we do in this poll, as we've talked about before in the previous months, is we ask these open-ended questions. What have you heard about Joe Biden lately? And this poll coming in the immediate aftermath of that poll report, we saw a lot of mentions of the age. We had seen that in previous waves of this poll. What was different this month was that issues of memory and forgetfulness, those kinds of words started to creep into it. And a number of respondents mentioned her report by name, which I think is pretty extraordinary. People don't really necessarily, they might hear something in the news, but they told us who wrote this report and they quoted from this report. It's clearly making a difference in how people perceive Biden's age.
All right, so Gregory, let's get to, all right, there's age, that's certainly an issue. And then there's how dangerous that voters perceive these candidates. Let's dig into that one. What do we find?
Yeah, if Biden's too old, the biggest liability for Donald Trump is that voters perceive him as dangerous. Now, we have to say it's by lower percentages. It's a lot more partisan divide on this, but still 58% of U.S. registered voters say that Trump could be described as dangerous. 48% said that Biden could be described the same way. So that's a significant difference, but still close enough that obviously there's a partisan divide there. And for Trump, this came right after his comments. Remember, he said this month that he would encourage Russian President Vladimir Putin to attack NATO allies if they didn't spend enough on defense spending. And so we heard a lot about that in the open-ended responses as well.
Well, speaking of President Biden, right now he's delivering remarks on the U.S.-Mexico border in Brownsville, Texas. Folks watching this on YouTube right now can see some images of that. We'll bring you any headlines, of course, as they come. But Gregory, I do want to get back to this polling because it's just chock full of pretty incredible information. Among that, how President Trump, former President Trump and President Biden are viewed when compared to third-party candidates that could possibly run against them. What did we learn?
Yeah, we talk a lot about third-party candidates every month because they are a pretty, I don't want to say unique feature of this election cycle. We've had third-party candidates before. Most recently, the major one that comes to mind is Ross Perot in 1992 and 1996. Here we have Robert F. Kennedy Jr., who is polling in the mid-teens. He doesn't seem to necessarily be helping or hurting either Biden or Trump in particular, but that's something we're watching very closely to see, will he perhaps be a spoiler? What we saw is that in the 7 battleground states that we polled, and that's Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania, and Wisconsin, Trump has a pretty good lead in most of those states. The closest is Michigan, where he's only up by 2. But those numbers don't really change that much when you add the third-party candidates into the mix right now, but that obviously could change over the course of this campaign.
You know, we were just talking about the president at the U.S.-Mexico border making some comments. Immigration continues to be a big issue, and I know it's something that you guys continue to poll on.
Yeah, 2 things that stand out there. One is that as the economy gets a little bit better month over month, and we've seen this gradually creep 1 or 2 percentage points a month, moving in the right direction since we first started conducting this poll last October. As the economy improves and the perception of the economy improves slightly, that's leaving room for voters to consider other issues as their top issues. So the economy is still the number 1 issue, but immigration is starting to creep up on it. And what we saw when we asked people, who do you blame for this border crisis that former President Trump and President Biden are speaking at even in this hour, we asked them who's to blame. Biden still gets the lion's share of the blame, but we saw a 5 percentage point move for Republicans in Congress and for Trump, people more likely to blame them this month than they did just a month ago. And that follows this entreaty that President Biden had to Republicans to pass a border bill that Trump quickly shot down.
Hey, Gregory, as I mentioned at the top, this is part of a series of polls that Bloomberg News and Morning Consult have done. Just in the last minute that we have, if you were to characterize the change in polling over that period of time, who is emerging, who seems to be emerging more favorably?
Oh, I don't think there's any question that former President Trump is in the stronger position as we talk here today. And what's remarkable is some of these states are inside the margin of error, some are outside the margin of error, but how consistent these leads have been by Trump for the past 5 months is got to be concerning to the Biden campaign. Now, they will say it's still relatively early. People are making sort of a referendum judgment up or down on the Biden presidency. Their challenge is to turn this from a referendum into a choice, to remind people why they voted Trump out in the first place 4 years ago. But as of right now, given what's going on with the economy, what's going on with the border, all those other issues, most of which voters say they trust Trump more than Biden on, Trump is absolutely in the stronger position.
Interesting stuff. Love going from poll to poll with you so much. Gregory Cordy, Bloomberg News, White House and politics reporter. Just a quick headline. Crossing Keurig Dr. Pepper holder JAB Holding offering shares, offering 87 million shares via Morgan Stanley. After the completion of the offering, JAB will officially, I guess, own about 21% of KDP's outstanding stock.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Lots of developing stories after ours. Vanguard Chairman and CEO Tim Buckley has announced plans to retire by year-end. The board has initiated a search process for a new CEO. Chief Investment Officer Greg Davis has been appointed president effective immediately. We're keeping an eye on NYCB after ours. New York Community Bancorp said it delayed its 10K filing after identifying a material weakness in the company's internal controls relating to internal loan review. Now, after ours, shares of New York Community Bank, they are trading lower. NYCB down now by just about 9.5%. Best Buy reported sales that did beat expectations as the retailer made progress toward reversing a 2-year slump amid soft demand for electronics and appliances. Best Buy up for a 7th day today, advancing another 1.5%. With more, here's Bloomberg's Kimberly Adams.
Charlie, the retailer made progress toward reversing a 2-year slump due to soft demand for electronics and appliances. Adjusted earnings of $2.72 a share beat expectations. Best Buy has struggled with declining sales in recent years following the pandemic era bump when consumers opened their wallets to upgrade their electronics and home appliances. Home theater, appliances, mobile phones, and tablets were the biggest contributors to the sales decline for the quarter, while gaming grew. Charlie?
And that's Kimberly Adams reporting. Lots of earnings after the bell. Among those names, Dell Technologies. Dell reported better than expected sales and profit as corporations appear to be updating their information technology equipment to meet artificial intelligence demand. After ours, we got shares of Dell advancing by about 13%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Get an extra day in February, and it's a busy one. Just crossing, Mattel saying it identified deficiencies in its internal financial controls and is unable to file its annual report. We're talking about the 10K. Problems relate to information technology controls that management determined represent a material weakness in its financial reporting, according to a filing Thursday. And we're seeing shares of what? Mattel down about 3.5% in the aftermarket.
Yeah, down 3.5%. Mattel doesn't see any material misstatements or omissions, we should note. But as you mentioned, Carol, it did find deficiencies in financial controls and has delayed filing its 10K.
All right. That's going to do it for us.
Is it?
Yeah. You want to stick around for another hour? God bless.
Hey, we got 4 minutes left.
I want to give them to someone who we both care about a lot.
Is it Doug Krisner?
Yes, it is.
Oh, hey, Doug.
Hey, how are you doing?
I'm doing well. How are you, Doug? How are you doing?
Doing very well. A lot going on today.
Oh, yeah.
You know, we were talking about earnings are over, but we had a fair amount of earnings between HPE, we had Autodesk, we had Dell rallying, HPE a little bit lower, down 2.5%. I mean,
SoundHound, Zscaler.
It's the tail end, but Sweetgreen, I mean, but they still come out and they give us some idea of what's going on in the corporate
But a lot
sector.
of juice in the market off the PCE data, right?
Yes.
So a lot of, maybe a sigh of relief. I don't want to be too
Why
cliche.
do you say a lot of juice? I do feel like it was just kind of like
Well, I think that
a little bit of momentum to the upside on the
Yeah,
equity side. Yeah. Because it wasn't worse, right?
right, and there was no real movement in the bond market today, right?
Well,
So
there's a little bit of movement in yields. A little bit.
Not
Slight.
much.
Come on.
We started our program off today with Ira Jersey.
bit.
killing me.
I'm looking at charts.
Okay,
Do you
good.
know that- Here, can I introduce you to the Bloomberg
yeah,
terminal?
yeah. What's the function?
So we did start our program with Ira Jersey
What's the function?
a
What
little
was that?
earlier.
Remember that thing with Dan Rather? What was it? What's the
The clicker?
No, what was it? What was the
What's the
Where are we
frequency?
going here?
What's the frequency?
What's the frequency, Kenneth? Okay.
Hello everybody, it's Fridays.
All right. What I was going to say is the narrow range that we've seen in yields has Bloomberg Intelligence, Ira Jersey.
All right, Tim
saying-
Ira Jersey Stenevec.
saying that
Yeah.
we could see a breakout as a result, up to 4.5% of the
That's what I meant by juice. It was a record high for the S&P. Give me a break. And
It was a record, right?
right.
That
know?
got lost in the earnings
All
shuffle
right.
after the close.
What else do you want to talk about?
I don't know.
What's on your agenda for the
So
program
I had the chance to talk with Gene Sperling, who's senior advisor to the
Yeah.
president, about the PCE.
Cool.
One of the things that I ask, though, is why is the administration having such a difficult time with the messaging? You know, even though there's so much in terms of success with the data that we have seen, whether you're talking about stuff on inflation, the labor market, the overall economy, Morning Consult poll, the Bloomberg Morning
We
Consult
just did it with
poll.
Gregory Cordy.
The Pennsylvania figure, where only 43% of the voters surveyed in Pennsylvania, this is a key swing state for Biden.
Right.
Only 43% believe the economy is doing well.
What's the disconnect?
I don't know, and I asked him. He thinks that, and Sperling, who's I'm referring to, he thinks that there's a bit of a lag. When he was in the Clinton administration, they were caught in the same dilemma, where you get a lot of positivity in the economic numbers, but people, the population, kind of, they don't respond, in such a dynamic way. There's a bit of a lag here.
Yeah, and maybe, some have said, I've been critical of the administration for not coming out and talking about kind of the success that we're seeing in the economy. Jay Powell says it's good. I think it's also fair to say that there are a lot of Americans who, yes, they're working, but every time that they go still to the grocery store or whatever, things are still, inflation is not increasing
That's
at the rate
fair.
we saw a year ago, but things are still pretty pricey.
I go back to this idea that it's like gas prices, and consumers in America don't have the right idea about what inflation and what deflation and disinflation are. So gas prices go up and go down. But other than that, you don't see prices go up and come back down.
The other thing that's curious to me when you're talking about walking up to an election, doing, tougher trade relations with China, this notion of tariffs, that's a tax.
Yeah.
And if anything,
we're all going to pay for it.
it's inflationary.
Yeah.
No messaging on that either.
Yeah, so it'll be interesting to see how the messaging changes. We just talked about immigration, right? People are focusing on who do they blame for the immigration problems? Largely the Biden administration. All right, are you done?
Yeah, I am.
Well, you're not done. You're just starting.
I'm just starting.
Tim and I are done. Have a good and safe evening, everybody. Doug, catch him later on Bloomberg. Balance of Power, though, starts right now.
From the world of politics to the world of business, this is Balance of Power.